Welcome to The Explainer. Today, we're going to pull back the curtain on something we all do, probably without even thinking about it, clicking buy online.
I mean, we do it all the time, right? But the actual process behind that one single click is way more complex than you'd ever imagine.
So let's dive in. We're going to explore this massive, hidden world of technology and finance that makes all of our online shopping possible.
Okay, let's start with the first thing you see, that explosion of new ways to pay when you get to the checkout.
Think about those Buy Now, Pay Later options, or BNPL. They're not just some convenient little feature. They are fundamentally changing how we spend our money. I mean, look at this. A staggering 71.4% of people who use it admit they spend more just because that option is available. That's huge.
And here's why it's so popular. The big difference is that BNPL gives you a really clear, structured plan for paying things off. It's not like a credit card with that kind of scary, open-ended revolving debt. And that predictability, it's so important that about 30% of younger shoppers will literally just abandon their cart if they don't see a BNPL option.
But what's on the horizon? Well, cryptocurrency. It's not just for investors anymore. Online stores are actually starting to accept digital currencies like stablecoins, which are pegged to a stable asset to avoid wild price swings.
And you can see why stores are getting excited about it. For them, it's a win-win. The fees are lower than credit cards, it's way faster for international sales, and get this, it completely eliminates the problem of chargeback fraud. Plus, it opens up their business to over 1 billion people around the world who don't have a traditional bank account.
So, you've picked how you want to pay. But what happens next? How does your money actually get from you to the store without getting lost along the way?
Well, it doesn't just teleport over. Your payment goes through a kind of secure middleman, a third-party processor. Companies you've probably heard of like Stripe, PayPal, or GoCardless. They're the ones who handle all the complicated, encrypted communication between your bank and the store's bank to make sure everything goes smoothly.
And have you noticed how you can do all sorts of bank-like things directly with stores now, like getting a small loan, or using a store's own debit card, all without ever stepping foot in a bank? There's a reason for that.
It's all because of a huge trend called embedded finance. What this means is that instead of you having to go to the bank for a service, the bank's services are being built right into the websites and apps you use every day. It makes the whole experience totally seamless.
And you see this everywhere. It's the BNPL options we just talked about. It's store-branded credit cards like the Amazon Visa. It's even those little offers for an installment plan or instant insurance right when you're about to buy something expensive. That's all embedded finance at work.
Okay, let's go another level deeper. Before you can even think about buying a product, the store has to have it in stock. And that takes a ton of money.
This is a huge challenge for online businesses. They have to spend all this cash up front to buy their inventory, with no guarantee of when they'll make it back. And during a holiday rush, their need for inventory can triple almost overnight.
So how do they manage it? Well, many of them use a really clever tool called inventory financing. It basically lets them get a loan by using the value of the products they already have sitting in their warehouse as collateral. It's a way to unlock cash to buy new stock.
And there are a few different ways they can do this. They can get financing for one specific large customer order or get a line of credit based on their daily sales. Sometimes a third party will even pay their suppliers for them. All these financial tools are working behind the scenes just to make sure the stuff you want is available when you want it.
All right, let's talk about the final layer. And honestly, this might be the most critical one of all. The invisible digital guardian that's working around the clock to protect your purchase from fraud.
Just take a second and look at that number. Over 500,000? That is the number of AI-powered cyber attacks aimed at the retail industry every single day. It's a staggering threat, and it's why a simple password just doesn't cut it anymore.
So to fight back, companies use these really strict security frameworks. You might have heard the terms KYC, or Know Your Customer, and AML, for Anti-Money Laundering. It's all about verifying that customers are who they say they are, and that every transaction is legit.
And the technology here has just evolved like crazy. The old way was like a security guard with a simple list of rules. The new way? It's like a behavioral detective. It uses AI to learn your unique patterns, how you move your mouse, how fast you type, to spot anything that looks even slightly out of the ordinary.
And this AI is incredibly good at its job. It's so effective that it can cut down on those annoying false positives. When your real purchase gets declined by 70%.
And for the retailers, it can reduce their losses from fraud by up to 80%. It's a total game changer.
So the next time you hit that buy button, just remember everything that's happening in that split second. Your one simple click kicks off this whole sophisticated, invisible ecosystem of payments, financing, logistics, and AI-powered security.
It's an amazing system. It's powerful, it's convenient, but it does leave us with one last question to think about. As all this finance becomes more and more embedded and invisible in our lives, who's really in control? Thanks for joining this explainer.